Technology is crashing, down 4.5% this week, with a bearish trend. Now a critical catalyst looms. This is what every serious investor needs to know about technology right now. Stay with me. Welcome back, or welcome if you are new to Financial Market Oracle. This week, the overall market context is one of normal conditions, with the VIX sitting at 18.4, indicating a relatively stable environment. Within this context, the technology sector is garnering significant attention, particularly given its recent performance. As of this week, technology is lagging the S&P 500, with the sector ETF, QQQ, down 4.5%. This underperformance is noteworthy, especially considering technology's historical tendency to lead the market. The sector's current struggles are a key focus for investors, as it accounts for a substantial portion of the S&P 500's weight. Given its influence on the broader market, the technology sector deserves close attention right now. As we delve into the specifics of this sector, it's essential to remember that this is educational content and not financial advice. Let us start with the technical picture and what the charts are telling us. The technology sector, as represented by the QQQ ETF, has experienced a decline of 4.5% over the past week and 3.04% over the past month, with an RSI reading of 45, which is typically considered a bearish signal. This RSI reading implies that the sector is currently in a state of oversold momentum, indicating a potential for consolidation or a reversal in the near term. The trend direction remains downward, with conviction, as the sector has been unable to break through key resistance levels. Support levels are likely to exist around the recent lows, while resistance levels are expected to be found at the previous highs. The current move appears to be an extended overreach, rather than a sustainable breakout, as the sector has been unable to sustain its upward momentum. A specific technical setup worth watching this week is the potential for a bounce off the support levels, followed by a retest of the resistance levels, which could lead to a period of consolidation. This would allow the sector to rebuild its momentum and potentially set up for a future breakout. Now let us look at the fundamental catalysts driving this sector. The technology sector, comprising tech, semiconductors, software, and AI, is poised to be influenced by general macro conditions this week. With the VIX at 18.4, market conditions are relatively normal, suggesting a balanced environment for the sector. Key stocks such as AAPL, MSFT, NVDA, GOOGL, and Meta will be closely watched for signals about sector health. This week, we are not expecting any major earnings reports from these players, but any commentary on future growth prospects could move the sector. Regulatory news, particularly concerning AI development and deployment, could also be a catalyst for movement. On the macro front, the overall economic environment will continue to be a tailwind for the technology sector, as companies increasingly invest in digital transformation and cloud computing. However, any signs of economic slowdown could act as a headwind, impacting consumer and enterprise spending on technology products and services. The fundamental thesis for being positioned in this space revolves around the long-term growth potential driven by innovation in areas like AI, cybersecurity, and the Internet of Things. As we navigate through the week, it is essential to keep an eye on these macro and micro factors. Next, let us talk about the specific risks you need to manage this week. The technology sector is facing considerable risks this week, primarily driven by concerns over valuations, regulatory pressures, and a potential slowdown in cloud computing growth. With the VIX at 18.4, investors need to be cautious with position sizing, balancing the desire for upside participation with the need to manage downside exposure. Unexpected headwinds could emerge from geopolitical tensions, economic downturns, or unforeseen disruptions in global supply chains. To mitigate these risks, a disciplined framework for managing downside exposure is essential, including regular portfolio rebalancing and a focus on high-quality, diversified assets. By adopting a prudent approach to risk management, investors can navigate the current volatility environment with greater confidence. And now for the strategic outlook, where does technology stand heading into next week? This week we maintain a cautious stance on the technology sector due to ongoing valuation concerns, with some subsectors experiencing growth slowdowns. A key theme to track is the impact of cloud migration on legacy infrastructure providers. Please note this is educational content and not financial advice. For more insights, like and subscribe to Financial Market Oracle, and comment your technology watch list below. Until next week, stay informed, stay disciplined, and stay profitable. Cheers! This video is for educational and entertainment purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. Past performance is not indicative of future results.